If you're thinking about starting your own business, one of the first big decisions you'll face is whether to register as a sole trader or as a limited company. It might just sound like a admin decision, but the choice actually affects a lot: your taxes, your legal protection, and even how clients see your business. In this video, I'm going to break down the key differences, the pros and cons, and how to decide which one is best for you. So let's jump straight into it. First of all, what's the difference? Put simply, a sole trader is basically you running your own business as an individual. You keep all the profits, but you're also personally responsible for any debts or losses. A limited company, on the other hand, is a separate legal entity. You can think of it like a separate person. That means the company has its own finances, its own assets, and liabilities. So, in short, a sole trader means you are the business. For a limited company, it means you own the business. So let's talk about pros and cons. If you want to be a sole trader, here are some of the key pros. Simple to set up. You can register with HMRC in minutes. Less admin. No annual accounts, just a yearly self assessment tax return. And full control. You make all the decisions and keep all the profits. There are some cons to think about though. Unlimited liability. If something goes wrong, your personal assets, even your house, could be at risk. Tax can be higher. You pay income tax, national insurance on your profits, which could add up once you're earning more. And it can be harder to raise funds. Some clients and investors prefer dealing with registered companies, and we'll talk more about that a little later on in the video. If you're interested in setting up a limited company, the pros include limited liability. Your personal finances are protected if the company runs into trouble. That's where the term limited comes from. Tax efficiency is another, so you can pay yourself through salary and dividends, often reducing your overall tax bill. Professional image. Having limited at the end of your name often makes the business look more established. And finally, it's easy to scale. You can find partners, investors, and raise funds much easier. Again, there are some cons. More admin. You'll need to file annual accounts and confirmation statements and possibly hire an accountant. Separate taxes. You'll pay corporation tax instead of income tax. You'll need to handle PAYE and dividends to pay yourself. Also, less privacy. Your company details, including director names and some financial information, is going to be publicly visible on Companies House. So, how do you decide? Well, let's run through a few examples to help you figure out which one works best for you. So, first off, paying taxes. As a sole trader, you pay income tax on your profits through self assessment. You also pay Class 2 and Class 4 national insurance. The more you earn, the higher your tax, up to 45% in the UK if you're in the top tax bracket. So it's simple, but not always the most tax efficient once you start earning more. What about a limited company? The company pays corporation tax on its profits, which is currently 25% in the UK. You then pay yourself through salary and or dividends, and dividends are taxed at a lower rate, which could save you money overall. You can also claim more business expenses, which reduces your taxable profit. Office equipment, electronics, even food can all be captured as business expenses. So while there's more admin, a limited company can be more tax efficient, especially once your profits start to pass around the 35 to 40,000 pound a year mark. What if you want to employ staff? Well, as a sole trader, you can employ staff. You'll need to register as an employer with HMRC and handle things like PAYE and pensions, just like any other business. But remember, as a sole trader, you're personally liable for wages, insurance, and anything that goes wrong. So if there's ever a dispute, or even if businesses can't pay staff, you're on the hook personally. As a limited company, the company employs the staff, not you personally. That means the company carries the legal and financial responsibility. You're better protected if something goes wrong, and it looks more professional when you try to hire potential staff. So, if you plan to grow your team, a limited company structure usually makes more sense long term. Finally, let's talk about securing investment or funding. This is often the area that gets overlooked. If you want to bring in business partners, attract investors, or apply for grants or loans, then being a limited company gives you a huge advantage. Why? Because a company can issue shares, which is how investors can legally own part of the business. You can't do that if you're a sole trader, unfortunately. Also, lenders and investors often see limited company as more stable and credible, and they can clearly see your accounts filed on Companies House. As a sole trader, it's harder to separate your personal and business finances, which makes funding a little bit more challenging. So here's a quick recap. Sole trader equals simple, flexible, but higher personal risk. Limited company equals more protection, more admin, but better long term potential. If you're just starting out, testing an idea, or want something simple and flexible, being a sole trader is probably the best bet. And you can always switch later on. But if you're earning more, want to protect your personal assets, or you plan to grow and hire people, then a limited company might make more sense. Either way, you're in control and you can change structures as your business changes. So, are you thinking about starting as a sole trader or a limited company? Which route are you considering and why? Let me know in the comments. As always, if you found this video useful, give it a like and hit the subscribe button for more business tips every week. Whatever you decide, don't leave it too late because it could be costly for you and your business. It's a common mistake that many owners make. I've worked with dozens of business owners and I've got a long list of common mistakes that can ruin your chances of success. Check out this video so you know what they are and how to avoid them.